Imagine you're a seasoned investor and you come across an article which makes a case for investing in a company. Let's say NVIDIA. Now the article is mostly qualitative, so no numbers, no deep financial analysis, just basic economics and logic. Now here's a question for you. Would you share that article with your peers on social media? What if the same article were mostly quantitative, filled with facts, figures, and rigorous financial analysis? Now if you're like most people, you said quantitative. But is that because you believe quantitative analysis is more informative? Or is it because sharing such an article would make you look smart and sophisticated to your peers? It's an important question because if the investment tips and articles you share are more about you and how they make you look, then how useful are they really for investment purposes? And what does that say about the investment advice your peers are sharing with you? Hello everyone, this is Professor Ikram, and today I want to share some very cool findings with you from a recent study that looks into exactly these questions. When deciding what investment information to share, do we prioritize the information that is most relevant or accurate, or do we pay more attention to what it says about us, or whether it aligns with the image we want to project? In this study, the researchers looked at data from Seeking Alpha, one of the largest websites in the US that provides independent stock research and analysis for investors. And what they found is that while users of the site read qualitative articles more frequently, it was the quantitatively heavy articles that got shared the most. In other words, investors seem to prefer sharing articles that made them appear more knowledgeable and competent, even if those weren't necessarily the articles they found most useful themselves. To confirm this finding, the researchers also conducted experiments with over 800 actual investors. They manipulated some participants' desire to manage their image, and then they observed which types of articles those participants chose to share. And sure enough, when the desire to make a good impression was heightened, investors shared quantitative articles much more frequently than qualitative ones. Now you might be thinking, so what? Quantitative articles are likely more accurate and informative anyway. Surprisingly, they're not. When the researchers looked at which types of articles more accurately predicted stock returns, they found that qualitative articles were much better at predicting returns than quantitative ones. This disconnect between what investors read and what they share can have pretty serious consequences. Specifically, it can lead to people acting on less informative content, which can cause stocks to get mispriced, and to people making poor investment decisions. In fact, the researchers found that stocks that were frequently mentioned in highly shared articles, what they call viral stocks, often experienced a price surge followed by a sharp correction, especially when those stocks were difficult to short sell. So the implication is pretty clear. The next time a friend or a colleague shares an investment idea or a stock tip with you, don't just take it at face value. Be mindful of their motivations. And remember, not everything that's popular or widely shared is necessarily accurate or helpful. And by the same token, be mindful of what you share with others as well. All the best in your financial journey. This is Professor Ikram. Thanks for tuning in. If you found this video useful, click the like button and subscribe to the channel. And feel free to ask any questions using the comment section. Happy learning.